Alright bros, we're back. Day 3. Alright, so what we're gonna do right now, it is what time is it? It's 5:20. Alright, we're gonna pick our stocks. We're gonna get our watch list going. We're gonna stick to our trade book. You know, we're not gonna have a red day on the first day of September. It's not gonna happen. We are going to be successful. Alright? Just manifest it with me. Anyways, I'm gonna get the time lapse up and I will see you guys in 3 seconds after I trade the stocks and I review everything with you guys, and yeah, we're gonna get it. Wow, look how big my arms are right now. Okay, see you in 2 seconds. Alright homies, I've set my watch list. Basically what I got going for today is Nvidia, AMD, this stock called SHPH, which had like lots of volatility yesterday and kept on halting to the upside, PDD, Occidental, and Tesla. So what I'm going to be doing, I think my top stocks are probably going to be Nvidia and AMD, just because they're extremely down, and you can see over here that they're testing RSI, and that means that it's testing the oversold level, meaning that it's extremely undervalued right now. So it would be a great time to buy and ride it towards the upside, because like you can see over here, every time it tests this, by the way, this is a paper trading account. I don't actually have $60,000. Yeah, paper trading. Anyways, every time it bounces on the 30 level on the RSI, it always rockets up. Like we got one that went up to the 50, and then over here bounced, went up to 70, and this was yesterday too, and then we got another one over here. So yeah, I'm just making my game plan right now. Nvidia, then this is my trade book, by the way. If you're a trader, you want to have a trade book, you want to set up everything, you want to know your plans, your setup, systems, rules, and all that stuff. But yeah, that's gonna be today's watch list, and we will come back with the trade review and all of that stuff. All right, so peace out, bros. It's currently 7:20 right now. I finished trading at 7, so it only took me half an hour. And actually, I sold my positions at like 6:40, just because market started to take a turn. But I was positive for the day. But that's kind of what I really like about day trading, is that like I literally finished half an hour into the day. Like I couldn't find any more opportunities because I'm on a cash account. I don't have a margin account. You got to be 21 to have a margin account, at least here in Canada. But yeah, no, I just entered a trade and then dipped, and then yeah, I can't take any short trades. So the most I could do is paper trade, but then I was just like, I feel like going to the gym and pumping some iron right now, so I was like, I'm gonna do that. But yeah, no, that's the one thing I love about day trading, is that literally like I'll go at it and I'll be done in half an hour, right? With like huge profits as well. Like imagine if I had $100,000 account and I just needed to make 1% of that a day, which is $1,000. Imagine making $1,000 in 30 minutes of work in a day, and then for the rest of the day you're finished. $1,000 every single day. There's 22 trading days in a month. That's $22,000 a month. Say you lose like $5,000, that's still like $17,000 at the end of the month. Like it's powerful. It's a really powerful skill and a great business to start. You can even incorporate day trading, which is what a lot of pro traders do when they start to go on to make like $100,000 in a day or $200,000 in a day, which there's so many people who do that. But that is like at the 5, 6, 7, 8, even 10-year level of just trading straight. If you have the skills and the mindset to keep on gradually growing every single day, right? But yeah, so that's kind of what I finished with the day with. And now I'm just heading to the gym to pump some iron. And then, yeah, we're just gonna, you know, I saw something yesterday and it was like, what if you spent 20 hours of hard work on something? You would be so much ahead if you just spent a solid 20 hours on something. But you know, people are stuck on starting for the first hour, you know. I don't know if I said that properly, but it's kind of a quote I heard yesterday. But yeah, 20 hours of work on something could put you months ahead. but we're stuck on starting the first hour. So it is a big mindset thing. Yeah, so it is a big mindset thing, and hopefully you guys can have a growth mindset like I do, and we can all grow through this together. But yeah, that's kind of like a cool thing I heard yesterday. But yeah, I'm gonna go to the gym, pump some iron. Actually, I gotta hit legs today. I didn't take pre-workout. I just had 2 cups of coffee. Coffee's probably my favorite drink. I didn't even really care about the caffeine part because I don't think it works on me anymore because I just have a bit too much. But no, I just love coffee. Anyways, I will see you guys in 2 seconds. Peace. All right, what's going on, guys? A little bit of a trade recap today. Basically, whoops, 1 second. Yeah, so basically today on my watch list, I had Nvidia, I had AMD, I had this stock. This was a weird one. I didn't trade it at all. I just wanted to watch it, but it was called Shuttle Pharmaceuticals Holdings. Basically, this one had a crazy halting day yesterday. It went from like $4, $16 all the way to 85. And then today it went up all the way to 125, and then from 125 it just fell to $45, which is kind of cool because like it dropped that much. But then another cool thing was it bounced from 45 all the way to 93. I just wanted to watch it. I didn't want to do anything with it because the worst thing with a stock like this is, say you bought the high of the day at 125, you can't even put a stop loss on this because the range is $73. So if you wanted to put a stop loss and play this properly, you'd have to put a stop loss at like $40 when you entered at $120. So it wouldn't make sense because if you put a stop order for this, you would get stopped out immediately and you would have lost like your daily goal, right? Anyways, just watch that. And then I had Pinduoduo, PDD. I had Occidental, Oxy. Oxy's actually really good. A range kind of stock. You can see it just bounces off of the 68 and goes to 69 like every single time it bounced. But the market was a little bit choppy today. It was kind of down today, especially like Nvidia and everything. And then I also had Tesla because Tesla is God. It's goated. Yeah, so this is a paper trade, by the way. It's not actual money. But basically what I did was my top stock, because I have a cash account, I cannot trade margin until I'm 21 years old, and I'm 19 right now. So with a cash account, you can only go long, you can't go short. So the only times I can go short is on paper trading accounts. And this is my paper trading account on TradingView. I managed to take this from 25 grand to 60 grand, which is kind of cool. A little bit of an accomplishment with fake money. Kind of shows me what I could do. But I had Nvidia on my watch list, and what I did was I didn't want it to break 140. I wanted to see a bounce off 140, and if I saw a bounce off 140, then we could have potentially saw the stock rise to not new highs, but like daily highs, like 146, maybe 47, since the ATR for the stock is $8. ATR is basically the average true range. That's how much a stock on average moves in a day. So what happened was I didn't want it to break 140. I told myself if it breaks 140, I'm out. I'm not going to trade it for the day because, it's just going to continue to go. So what happened was I watched it off the top, 141, bounced all the way to 143. So I was like, okay, a little bit of potential. But then, as you can see here, it kind of formed a pattern. This pattern, I would say the best name for it is an asymmetrical triangle. And asymmetrical triangles are a little bit tricky. Let me see if I can. We want a line. Let's make it thick. We want a thicker line. Yeah. So an asymmetrical triangle is a little bit of a tricky one. Basically, if it comes from the top down, so it comes from the top down, which is right here. It started up here and then it dropped down to here. So as I was saying, if it comes from the top and it goes down, so over here it started at 145 and the pre-market and it came down to 141, so it dropped $4, then it's going to be a bearish asymmetrical triangle, and vice versa. If it came up and then had this little pattern kind of trading, then it would be a bullish asymmetrical triangle. So we could have potentially seen this go up to like 148, 149, maybe even 150. Basically what happened was it came from top down and then it formed this pattern, which I kind of noticed. So you can see it over here. Bounces off support and resistance, comes down, consolidates, goes back up, couldn't break 143.50, came down, couldn't break 141.80, came back up 143, and then it just went down from there. It went from 100 and what was the high of the day? High of the day in actual market would have been 143. And yeah, you can just see from the high of the day, it just ripped down. It went from 143 all the way down to, let's look, low of the day looked like it was 132. And I wish I caught this long over here. So this one would have been a bullish pattern, but I wish I caught it. It was around 11. I came onto my computer and I looked at NVIDIA. I saw it was consolidating at 134. And basically what happened was it jumped from 134.50 and it went all the way up to 139. So I noticed it. I was like, oh, I should have traded that, but you know, I was kind of done for the day. I didn't really want to put on any more trades. But yeah, so that was NVIDIA. I told myself I wasn't going to trade it if it dropped below 140 because I didn't know about because I knew it would have just kept on falling. And AMD and NVIDIA are kind of like identical companies. They basically follow one each other. So AMD kind of had the same price action, but I didn't want to trade it if it dropped below, I think, 81, where it kind of consolidated. And then from 81, it just went all the way down to 78, and then it caught the same bounce at 11 from 79 all the way up to 82. So that could have been another trade to catch, but it's kind of funny how you notice some things like if a stock, like a big tech stock, is down for the first hour and a half to 2 hours, and catches the low around 10-ish, it's always going to bounce up to exactly where it was. And it always happens with big tech stocks. And if it goes up around 10-ish, it's going to find the high of the day, and then it's going to reverse, and then it's going to go back down to where it started. So every day is kind of like a U-shaped pattern where it starts off one day, one zone, and then drops down, finds its low at around 10:30ish, and then when 11 comes in, buyers come in, or sellers if it gone up, and they come and buy around 11 because it's a really good bid, and especially big institutions, and then it just goes back to where it was. And then I talked to you guys about this stock, but today's trade was PDD. And PDD had been up on some news for the past couple of days now. So for the past couple of days, it's been gathering a ton of volume ever since the 30th. Yeah, the 30th. So on the 30th, wait. Why does it say 20? Oh, the year. Okay. Got confused. Yeah, so the 30th, it went from 64 all the way to 67. Next day opened up even higher, went from 68 all the way to 72. And then today it kind of did the same movement. So basically what I wanted to see for this, I'm on the 1 minute time frame, by the way. So my game plan for PDD was essentially kind of to catch a break above a VWAP. So when it opened, it was super volatile, lots of volume, but basically it put in this hammer doji over here, so it dropped all the way down to 68.90, went all the way back up to 69.60, so already a big winner right there, but I didn't trade that. And then it did the same thing, but just on the other side, kind of like a hammer kind of candlestick, an inverse hammer, and then it just had this huge, fully like best green candlestick you can ever imagine. Basically what happened was it after this candlestick had a small little bearish candle, and then the same thing happened again, and then this one right here dropped all the way down to give you this good opportunity right here to enter, but I didn't enter on this one. What I did pick up was this really long wick on this candlestick, this extremely long wick to the downside, but it didn't close below VWAP. It went all the way back up, closed above it. And so this second one was when I knew it was a good opportunity to buy. So I waited for it to go down, which it did, to 69.60, came up, and I bought it just at 68.80. I wanted to buy exactly on VWAP, and so I held my position. And right now I'm practicing on selling partial shares, because what I used to do, and you don't want to do this, is I would enter a position and then immediately close everything when I finish, which you don't want to do, because imagine if I entered at 69.80 and then closed at 70.48. Well, the stock went all the way up to 72, and my position is not closed, and I just the winner's done. Like, that was the high of the day. That was the only time I could have traded it well. So I'm practicing on using partial closes. So what happened was entered here at about a couple shares and held it, and I knew it was going to go up because of these long wicks to the bullish side, because it kept on just going up, put in this huge wick and rejecting the break of VWAP. So what happened was bought it on VWAP, held, and then it had this huge break right above the 200 EMA, and this huge candle that just went up. I think I sold half my shares at 70.60, because at this point I was up about 1% of my account. I was up 1%, but I wanted my winners to go, so I sold at 70.60 and I bought at 68.80. But what I got to practice doing is selling it at every dollar. 75 cents to a dollar is your kind of winning sell point. And so what I did there, I kind of sold a little bit too early, because I did end up going to 62. So what I should have done is sold at 71.80 half my shares, because the stock kind of have problems whenever they reach a new level of price. So when it went from 71 to 72, it didn't have that many problems, but then when it hit 72, it completely rejected and just fell all the way down to low of the day at 68 something. But sold half shares at 70, what did I say, 70.60 I think? Yeah, 70.60. And then continued and held my other half, and I sold it at 71. But if I could go back, I would definitely sell at 71 and then sell at 72, sell at every dollar level, maybe 70, 180-ish, if you can tell, if you can notice lots of these, if you see lots of these just before the next level, then you should probably get out, because same thing down here, long wicks to the bearish side, but the bulls were in the game that point. And then up here just tried to break through 72.02, long bearish wick, long bearish wick, long bearish wick, and then just completely down to the downside. But what I did was sold it at the second half at 71. So what I should be doing is selling partial shares every dollar. So hit 72, rejected it, couldn't break through it, came down, and this is where I thought I could have a reload opportunity, because it was a consolidation and it was an uptrending pattern, consolidated, and I was like, all right, I'm gonna reload. So I bought at 70, 70.70, I think. Yeah, 70.70. I bought at 70.70, I think, on this third candlestick, right, fourth red candlestick, because I noticed this little oh no, not that one. I think I bought it over here on this candlestick, on this little hammerhead doji or something. Came down to VWAP, and I bought it at 70.60, I believe, or 70.70. One of those price points. I know it had like a 15-cent winner, or sorry, 10-cent winner. But basically, what happened was I bought it, and I noticed it went up, and then came down. I just knew the consolidation was happening, and then it had this huge bullish wick. Where it went up to 71, and then I saw this hard reject at 71. Lots of sellers were in the game, so I was like, that's not a good sign. I held it for just a little bit, so it went up to 70.93, came down, and I'm like, yeah, this is time to sell. So I sold at like 70.80, which I'm super thankful for, because after 70.80, I think I did buy at 70.70. Sold at 70.80, 10-cent winner, but closed position because I knew that this was going to happen, and thank God that I did, because after that position, it just tanked. It tanked from, let's see, $71 all the way down to the low of the day of 78.61. And I wasn't on the computer at 8 o'clock, but basically this could have been another reload opportunity. 78.60, and then bought it and rode it all the way to 70. So could have sold like half shares at 69, and then another half at 70. But yeah, so I thought it was going to be a reload opportunity over there. Basically, my strategy of how I trade is kind of simple, and it actually has really good back testing qualities. But basically, I have 3 lines. I have 2 AMAs and 1 VWAP. And if you watched the last video, I explained what VWAP was. Basically, it's where institutions buy, big institutions. It's where they buy and enter their positions at VWAP. And obviously, you can tell if the stock is above VWAP and they enter, most likely it's going to be a bullish day for them. If it's below VWAP and they enter, it's going to be bearish, right? Most of the time. Anyways, my strategy is this. I have a 35 EMA, a 200 EMA, and my VWAP. If the stock is above 200 EMA, then the stock is in an uptrend. It's a bullish stock. If it's below the 200 EMA, then it's a bearish stock. It's in a downtrend. My 35 EMA is kind of there for guidance. Basically, I have 2 different setups. I will only trade a stock if it's above the 200 EMA, and either VWAP is above it or the 35 EMA is above it. One of those 2. So let's look at an example. So kind of to the end of the day right here. So we have 200 EMA, stock is above it, nice. And then we have the 200 EMA is the red line, 35 is the blue line, and VWAP is orange. VWAP, I probably wouldn't have traded this, just because I noticed that VWAP is below the 200, meaning that it's overly extended. But basically how it works is you would wait for a break above the 35, and you would wait for it to retest. And this, you kind of have 2 lifelines. If it retests at 35, consolidates, you would enter and ride it to the upside only on the break. So over here, 70.66 drops down, tests VWAP, and to be extra safe, we wait until it breaks 70.66 again, which it does. Breaks 70.60, consolidates, and then just goes up to 71.40. Okay, so you wait until it breaks that high. If it doesn't break that high, then you're not going to enter. Same thing with VWAP. If it tests at VWAP, then that's also going to be where you want to enter as well. Or if you're like a seller, say it comes down, consolidates, came down, went all the way back up, tested VWAP. This is how reliable that line is. Tested VWAP, and then from VWAP just drops down to 69.11 from 70.40. So that would have been your 1-to-1 risk to reward. Another good example to show this, Tesla. So I wouldn't have traded this today because it was very bearish. Actually, I'll look at something else. And my trading view is doing the weird thing it does with the stock charts again. Okay. So yeah, right here, you can see this. So 35 EMA is above 200 EMA, and VWAP is above that. Right over here, it crosses, goes up, hits 275, drops all the way down, consolidates. And for this one, since the ATR is a little bit higher, I would probably see what you would do in this scenario, because the PDD Pinduoduo, it was kind of way lower than I thought it'd be. But if it drops down to 272, the only way I would enter is if it broke 273 and maintained it. So not this fake out red wick right here, because it didn't maintain it. So I would only, so it came down to $272.27. I would only re-enter this consolidation period if it breaks 273 flat, which it ended up doing. So it broke 273 flat, and the stock went up to 274. I would have taken half profits, came back down to 273.24. So I would have probably added more, and then rode it back all the way up to 275. Close their whole position maybe right there. But you can notice how perfect this example is where it bounces off the 35 EMA, right? Does it multiple times. It respects it a lot. 35 EMA back here, 35 EMA back here. Over here, it's just bouncing off of it many times. Breaks it over here, tests the VWAP, comes down, tests the 200 EMA. It's kind of like three lifelines, right? Over here, tests VWAP and the 200 EMA. Just depends on experience and how well you can interpret it. NVIDIA, different situation. Test the 35 EMA because it was down all day. Over here, it barely tested it, but it was like 10 cents off. When it went down for the day, went all the way down to 137, and went up to 138, and then came all the way down. This would have been a great short. AMD consolidates around it, you know. That's my strategy. It works really well with ETFs like TQQ, SQQ. I know Ricky Gutierrez uses the same strategy, but he doesn't have VWAP, which, I mean, I prefer it with VWAP. It just makes me more secure and more comfortable. But yeah, that's going to be for today's video, kind of trade recap and my strategy. If you guys enjoyed, subscribe, leave a like, comment down below what you want to see, and yeah, we're going to move on and go to tomorrow's video. All right, peace out, guys.